Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, another day in the VIX pit and another pretty slow day. The VIX is just about unchanged in the mid-16s as the market has moved downward slightly. The option trading today has been pretty slow. The main strategy we're seeing quoted repeatedly over and over again is that June, July, August 1720 call spread stupid. The customer looking to sell all of those call spreads, apparently believing that the level of the VIX futures in the back months, extremely elevated above the cash, will not hold up over time, will come in. That traded 5.5 today. So if you average that per call spread, that's about 180 each call spread. It's traded as high as 190 per call spread. So it's moving down slightly as the back month futures are creeping in ever so slightly over the past couple weeks. We'll be tracking that spread, I'm sure, for the next few weeks as it's been quoted every day with an interested seller at some level every day. We've talked a lot about how there isn't as much interest in the upside, and people are making bets on the upside without really buying extreme upside calls. So one example is today we had the May 2026 1 by 1.5 call spread. So the customer bought one of the May 20s, sold 1.5 of the May 26s. Now this really is an upside play. They're looking for protection in the 20s and into the mid 30s. The bet pays off between 2090 and between 3620. So they have quite a range there, and its maximum value is just over $5 at 510 that they could possibly make. So this customer is looking for some protection, but is not looking for protection against a crash. In the event that the VIX does crash, goes up, or the market does crash, VIX goes up to 40, 50, 60, they're losing money because they're short, they're net short call options. They bought one, they sold 1.5. In the event of a crazy gap, a double, a triple, they're net short calls. But they're looking for some protection in the event of a moderate S&P 500 pullback, a 5%, 10% pullback. They're hoping that this spread will go in the money. They did it 5,000 by 7,500 times, and that's the type of upside call trading we're seeing recently. People buying call spreads, people doing ratios, things like that, rather than just outright buying an upside call. This is Jamie Tyrrell with Group 1 Option Monster.